Before we get started, we just want to thank Old Republic Surety for sponsoring this episode of Let's Get Surety, as well as NASBP virtual seminars for the fifth year in a row. For more information on Old Republic Surety, visit www.orsurety.com. Now on to our show.
You're listening to Let's Get Surety. Let me hear your bonding talk with Kat Shamapande.
Hey everyone, it's Kat Shamapande. Thanks for joining me for this episode of Let's Get Surety. I have with me today Mark McCallum, my co-host, CEO of NASBP. Hey Mark.
Hey Kat, glad to be here.
Thanks for being on. And today we're going to be talking about surety and moving into a more digital world. And to do that, we have with us Aaron Steffey, co-founder and co-CEO of Propeller Bonds. Hey Aaron, thanks for being on.
Hey, thanks for having me. Appreciate it.
Well, before we dive into talking more about surety, can you tell us just a little bit about yourself, your background, and about Propeller Bonds?
Yeah, sure. I was born in Indianapolis, Indiana. I've lived in Philadelphia area for 10 years now. But I grew up in the insurance industry. In a way, my mom and dad had a very small, Main Street mom and pop insurance agency, with a home auto business life, and a couple employees. And when I finished school, I went to school at Ole Miss, and then I came back home to kind of work in the agency for a while, figure things out. And over the course of time, our agency was not a big bonding agency at all, but we would kind of trip over it as it would come in, as many agents do that don't have a bonding department or a surety expert on staff. And oftentimes they don't do enough volume to even require one. So over the course of time, I would talk to my cousin who co-founded the company with me, Chris Colger. He was a surety underwriter at Chubb, and he would just kind of tell me the pain points of surety from his lens and mine from mine. And we continued to talk. And then I met my technology partners here in Philadelphia, and I kind of worked with them for the better part of a year, getting this bond platform launched that was just setting out to help agents like us, non-surety agents, transact bonds more efficiently. And eventually we launched the company, started getting some momentum, and I brought my cousin over. So that's kind of the backstory, but that's kind of, we launched 2.5 years ago now, have had a lot of success, growing the platform and everything, and continue to, tackle more problems than just transactional surety. But it's really centered around we're really a distribution company, and it's really centered around surety distribution in a more streamlined, efficient manner. A lot of agencies like the one I'm talking about that I came from, they don't even market bonds because they look at it as low ROI, high touch, low dollar, and they don't market it. And so what we've also allowed those agents to do is to market surety to their existing client base and be able to do it confidently, knowing that we're their kind of bolt-on surety department in a way.
So I imagine it sounds like your timing is really great. The COVID pandemic, I think, really brought home the need to move towards digitization. Would you agree with that, Aaron? And how have you seen things go in the last 2 years?
Yeah, so it was it was very serendipitous for us. So we were building the platform, me and the tech guys were building the platform about a year prior to launch. And we were only going to launch, Mark, in the 20 states at the time that were accepting electronic. Virginia was the first, I believe. And our idea was we'll launch in those states. And then as others add, we'll continue to add states as we go. And then our expected launch date was going to be April 2020. And that got pushed back. But with that, in that next 3 or 4 months, it was oh my gosh, all 50 states are accepting electronic signature seals. And still today, we have high 90% acceptance rate. There's a few obligees that are just never going to, get with it. Right. But yeah, so overnight, the market kind of came to us. So, that was our kind of stroke of luck moment a little bit. And so we already had been building the platform for a year prior to COVID, and that was just a big time accelerator and an enhancer. So, we've really It's kind of feels weird to say it, but we benefited, mightily from COVID, honestly.
Right. Well, I know we talk about digital bonds, but that might mean different things to different people. You were talking in part about your experience with owners. Maybe give us your version of what you view as a digital bond, and then maybe tell us about what it's like to convince an obligee to go down that path with you and accept digital bonds.
Yeah, I mean that. If I'm being honest, that mostly falls on our underwriting team. So typically, I guess that's a really good question, because what I would view as digital is just electronic sign signatures and seals.
Okay.
That's what I would view as digital. Now you're getting into now they have the blockchain ledger they're working
Right.
on. We don't really do any of that.
Okay.
So what we're doing is assigning bond number, electronic seal, signature, POA, etc. We can go so much further, but it's a tall task to convince every obligee in America to accept. I mean, I would love to be able to print a QR code for validation purposes that just
Right.
instead of calling an 800 number for Travelers or Zurich or whoever, it's like just scan the QR code and this will tell you if it's valid. And we could do that, and we are in our system. We could do that overnight, but then you have to convince everyone to accept it. So we really let the obligees lead the industry when it comes to what we're going to do. And so now we're just kind of juggling it's so fragmented. There's not some central depository. NMLS is gaining momentum, I feel like, with some of that stuff. But, state of California takes theirs electronically. So I would call that like digital acceptance. But I would say digitizing the actual bond form itself really just involved mapping application fields to the bond, exactly where they need to go on 7,000, 8,000 bond forms. And then assigning a carrier, stamping the digital seal, digital everything. So that's to me but you could make an argument, I think, much further than that. But to me, that's what our version of digitizing the surety processes look like.
Okay. So, different states are at different, I'll go states of awareness in terms of how they are treating electronic documents, electronic signatures, e-notarization, things like that. Mm-hmm. So are you finding easier acceptance in states that already have electronic procurement systems in place? Sounds like they may have gone through that. Or how do you go about figuring out whether or not you're going to have success in a particular jurisdiction?
Honestly, it's just purely, it's kind of crowdsourced by our agency base. So that is the one great thing about having, and this was an unintended consequence of the business. We have about 2,600 agencies appointed, 2,700 maybe agencies appointed right now. And they're in every nook and cranny of America. So we get notified very quickly. It's become like our version of Suretypedia, right? Like we get notified very quickly from every corner of the U.S. when a bond form gets kicked back or there's a new bond that comes online or gets requested, because we're getting it from a million different directions. And so it's become a way for us to crowdfund our bond library and also the parameters behind the system. Like we know, when like the Oregon Department of Transportation wants the signature in blue ink, not black ink, or stuff like that. And so we have a whole database behind. But our thought early on was like, it's better to just be reactionary on that than try to, if we were trying to proactively know every single thing every obligee wanted, we'd never get off the ground. Like we'd never launched a company. So you have to just accept the fact that, hey, you're going to get a bond form kicked back every now and then. You're going to have to overnight some bonds here and there. You're going to have to do that. And then you kind of figure it out as you go, and you're doing enough volume now to where I feel like we've got to have one of the best databases of like as far from a bond library and obligee parameters perspective, like we have to have one of the better ones out there. So that's just been our take on it, is kind of, let it rip and figure it out when screw ups.
Yeah. There are just so many obligees out there.
Yeah.
There's more than you ever think. Go ahead, Kat.
Aaron, you were mentioning the blue ink versus black ink. Is that something you get away from a little bit when you're doing electronic bonds?
Um,
Or are those ink color requirements still in place?
no, sometimes they are. It's very few though.
Really? Okay.
I'm kind of picking on the one I said, but it's very few. There's not a ton. I mean, and I find that well, I suspect so with our process, the customer, the principal, still signs the bond form and gets it to the obligee. We
Hmm.
elected to stay out of that process. We could have added like a squiggly thing on on the application, or we could have added like a DocuSign feature. But ultimately, I feel that having the wet signature of the principal goes a long way. So I think that maybe helps. That's just my suspicion. I don't have data to support that, but I think that we get minimal pushback now just because we've corrected things in the system to be how they want. But yeah, there is still some of those odd or like blue paper versus and
Right.
on some stuff, Cat, we just overnight it still. We like
Yeah.
it's not we lead with trying to put up the fight. But at the end of the day, the customer needs their bond, the agent wants
Right.
it off their desk, and we have to like make sure we're servicing our agency force as best we can. So we'll pay the overnight fee and we'll overnight a bond when needed, and it's marked now behind the scenes like, oh, anytime we sell this type of bond, we're overnighting it, and that's just part of the process.
And is that true for notarization requirements as well? They vary all over the place.
Mm.
Yeah, we stay out of the principal's notarized signature.
Okay.
Ours comes signed and sealed and everything. But yeah, if the principal needs to sign it, we leave the notarization piece to them as well. We looked in early on like the electronic notary piece and whatnot. I don't know if it's something we'll ever get into. I think the principal signature part of the process we're good to stay out of. And I think it just causes a lot less headache.
We've kind of been talking, and we didn't ask you if you're in both commercial and contract surety. So that would be a question. And then, if so, do you see greater acceptance in one major field versus the other?
Yeah, for sure. So yes, we're in everything. I mean, we fidelity, contract, commercial, probate, probate, and contract still want the like actual bond overnighted more often than not. Commercials like super highly accepted in a digital manner.
Yeah.
But the contract and the probate, although contract still is starting, I think it maybe like kind of depends on the size of the job and the obligee. But we definitely get electronic acceptance on both of those, on probate and contract, just probably at a lower percentage. I don't have those numbers off the top of my head, but it's definitely a lower percentage. So those were still oftentimes overnighting. But yeah, we're in commercial, we're in contract. We started out commercial transactional was really like our bread and butter. And then we've just kind of mushroomed from there, moved upstream. And now we're finding ourselves doing like a lot more specialty deals as well. So we look at, private equity stuff, oil and gas, cannabis, like some of those niches, energy. And we're kind of become like what I call an appetite aggregator. So, you can submit it through one portal, and on some of those maybe tougher to place things as well. And we will go farm it out to 20 different carriers and figure out the best market and deliver terms, the best possible terms. And then we still streamline the billing and issuance process. So, we do, I guess to get back to your question, we do a little bit of everything.
I'm just curious what some of the additional obstacles you have seen going through this process. Can you kind of illuminate a little bit more on that? Maybe towards acceptance, or you said that some obligees are reticent. What are some of the reasons that they've articulated to you?
That would be more on the underwriting team, but I think I think it's just COVID was over. They were going to get back to what we know and what we do. So I would say the hard part about digitization has not really been the acceptance. That's really not been our big bugaboo. The hard part about digitization is mapping and dealing with 8,000 different platforms. There's the lack of standardization in the industry. I always try to explain it to my PNC friends. It's like if you sold cyber insurance, but there was 8,000 different policy jackets for every different town and municipality and everything. And they're all kind of underwritten a little differently with different limits. And so that's been the hard part about digitization is, the state of California on their contractor license bond, they want the contractor license number, and a million other places they don't. And you have to pick out those little tiny nuances. Otherwise, the customer has to either write that in or they get it rejected. So that's been, to me, the most difficult part about digitization of the bonds has not been the acceptance piece. COVID really helped that. It's been just maintaining and keeping accurate that like depository of bonds and the questions needed to be asked for every tiny little type of bond.
Well, and it's, my hope is that digitization will push greater standardization, particularly with obligees. And I'm always concerned about what I call the lawyers. Not that there's anything wrong with being a lawyer, but they don't always they're not always seen as being very progressive, particularly when it comes to adoption of new technology and moving down a path that they're not comfortable with. So that's why I was curious about. Is the stumbling block legal acceptance? So you mentioned California. I know, like. The attorney general drafts a lot of the bond forms for the state. So if they're not on board with maybe standardization, then that puts a greater burden on you dealing with one state and then going to another jurisdiction. Do you think there's a path for the industry to help advocate for greater standardization of terms?
I think it's an uphill battle. I mean, across all these, because it's not just states, right? It's different branches within states, right? So the contractor license board in California believes one thing, but notary's done a different way, or that's kind of that's the hard part, is just even the different branches of government within each state. The closest standardization I think I've seen is like in Ohio with the statutory 12/31 renewal dates, and it seems to be like a nice flow there. So we have a ton of success in Ohio with that. It just, and I don't know how that necessarily happened. That was probably before my time in surety, but I just seeing that all of these obligees, or almost all of these obligees, kind of have the same standards of renewals and everything. And the fact that it's not a continuation certificate, you need a new bond form each year for most of them. And even if it's more work, I like the rigidness of it and the structure of it, just because you kind of can put it to memory and know. Yeah. And so I think you could maybe do it state by state, but I think you'd probably still have a lot of differences between states. So to answer your question more directly, I personally, I don't think it'll happen in my near lifetime.
Well, but I think that's a wonderful insight that you gave us about, well, maybe it's state by state. Ohio could be a model to look at. And certainly the industry has its work cut out for itself on going this direction, but we've got to try. And, I think this is definitely the wave of the future, is digitization of bonding. It makes such great sense. So it's great to see the different efforts out there.
Well, and you even just looking back, 5-10 years, you can see how much change there's been. I'm sure you've seen that, Aaron, since you guys have launched. Yeah. When you look further off into the future, what do you see coming down the road for surety as an industry?
I think there's a really, speaking for us, we're coming out with an embedded solution pretty soon. And you're hearing a lot of talk in InsurTech about embedded, right? Being able to meet the customer where they are. I think surety is a perfect play for that.
What do you mean by embedded? Can you just go into that a little bit, just for anyone who's not clear?
Yeah, no, that's great. So let's say we, typically speaking, so us personally, we only do wholesale. We don't sell direct. But let's say one of our big broker customers has a relationship with Home Depot. And every contractor that signs up to be an authorized contractor with Home Depot may have to get a bond in place to be above board, because Home Depot wants to make sure you're insured and bonded before they allow you to install anything. And so having something right there within Home Depot's website, in their ecosystem, click buy your license and permit bond, because they're already capturing your name, address, email, phone number, you really don't need much more on a lot of the L&P stuff. So on transactional surety, I think it's like being embedded, meeting the customer
Right.
at the point of sale, or what we do sometimes on contract is white label our product for GCs and say, hey, anytime you need your subs bonded, just have them go through this. And there's still another agent of record behind it, but just like not this idea of sitting back, I guess maybe being more offensive or more proactive instead of reactive, of sitting back, waiting for it to come to you, taking the product to the customer. And, I always think of an example like a LegalZoom, for instance. LegalZoom, a ridiculous percentage of LLCs every year are established on LegalZoom. And why not be able to embed a product where it's, oh, you're a plumber in New Jersey? Here's your New Jersey plumber's bond while you're at it. And those kind of things, like finding those plays of embedding the bond purchasing process. And then I would also say the second thing, and I'm talking just purely on the distribution side more than digital, is, but digital kind of it goes hand in hand here. I think there's a huge opportunity to create new bonding opportunities and bond forms where they don't exist today. I think the market is kind of tied to inflation, but it's, creating, especially with franchises and franchisors and whatnot, creating unique different types of bonding opportunities and working with carriers to put together the language that helps, these people kind of work together hand in hand. So I think there's a big opportunity there as well on the kind of the distribution and growth of the industry.
That's music to my ears. I love the idea of expanding markets. It's interesting about franchisees, and I love it particularly in the private sector. Do you see any other areas like that you think are ripe for opportunity? I mean, I know we're from a government relations standpoint, we're looking at broadband infrastructure and seeing if we can't have a preferred component of a bond as security in those kind of spaces. Where else might you see opportunities?
The other big place that's already being kind of disrupted, and it's with a bond-like product, is there's several insurtechs that are basically replacing security deposits for apartments and whatnot, and they're just simply using a bond product. And so far, it's just been something that is tied to maybe like 2 or 3 different insurtechs. But I think we're getting close to being able to unlock that product for agents and brokers, PNC agents and brokers. So say you work at a huge agency that has a big multifamily practice and insures apartment complexes all over the country. We can start to embed, using our system or someone else's, embed that surety product in replacing security deposits. So that's another huge, obviously cannabis, as whenever that becomes legal, that's going to be a big Wild West type of opportunity. But those are the 2 other places where I've seen, we're on the precipice, I think, like with just seeing a ton of things unlock with the security deposit. And, we get requests all the time, but we don't have it. But I mean, the requests I'm getting all the time are that lease guarantee type of stuff, especially after COVID.
Yep.
And someone's going to figure out a way to underwrite and do that. There's just a huge need or a huge desire for it. There's, profitability concerns and whatnot, but I could see someone stepping out and starting to dabble in that, at least on the lower end of the spectrum. Because in a lot of ways, essentially, it works like this. And those security deposit bonds are interesting too, because they work like a typical surety bond, but they also have an element of a utility deposit bond in there as well. That, like, if you walk out on your last month's water bill or electric bill, there's also a payment schedule in there too. So it's an interesting kind of flex bond product that I think is pretty fascinating if people, and it's still new. So I think like that will continue to evolve.
Yeah. Fascinating.
It is. Well, before we let you go, Aaron, can you just give us, if you could say one thing to a private owner or a public owner who is considering digital bonds, and just to sway them towards that, what would you say to them?
I think I always say our biggest value prop is speed. And by accepting digital bonds, you are making just everyone in the entire value chain more productive and faster and easier to get it off your desk, both from the agent, the customer, the project owner, whomever, the city. It's if you want to speed things up, you have to accept the digitization. So that would be the only pitch I would make, is just speed. And there's ways to put guardrails on it, around the way as well. And that would be my pitch to them.
That's terrific. Well, it's been great having you on with us. It's been really interesting to talk with you about the digitization of surety. Hopefully we'll be able to talk to you again sometime and talk to you later. You've been listening to Let's Get Surety, brought to you by the National Association of Surety Bond Producers. For more information about the NASBP and its members, visit nasbp.org. Before we go, we just want to say thank you again to Old Republic Surety for their generous support in sponsoring this episode of Let's Get Surety. For more information on Old Republic Surety, visit www.orsurety.com.